My name's Dave DeBow, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content. Hey gang, welcome back. Today, zooming in from Maryland, we have a very accomplished real estate entrepreneur, investor, property manager, Mr. Andrew Hinton. And Andrew has a very interesting buy box, very interesting market that he's focused on. And we're going to learn all about that and his tips for success on today's episode. So Andrew, welcome to the show. Great to have you.
Thanks for having me, Dave.
Yeah. So Andrew, give us a little overview of what kind of properties you tend to focus on. Well, let me ask you differently. What your current portfolio consists of, what kind of properties you have in that, what market or market areas you're looking at, and kind of what your buy box is.
Sure. Yeah, sure. So we're based just outside of Baltimore, Maryland. That's where we started our business. We do mostly multifamily apartments, a little bit of retail in and around Baltimore. And then we also have a portfolio in Philadelphia and Hampton Roads, Virginia, which is kind of the Virginia Beach area of Virginia. So that's what it looks like. We're about just over 1,000 units. I'll say the property type has evolved. So we started in single family and smaller multi-units and have since evolved into more kind of retail strips on the retail side and then larger scale multifamily assets on the multifamily side.
Very nice. Yeah, I was taking a look at your website and a little bit of the portfolio there. There was one of those properties. Well, they're all nice, but I mean, one really just looks like it was. It's beautiful. The Brown's Loft Apartments.
Yeah.
That's just a beautiful historical looking building. That must have been a lot of work, but I'm sure very satisfying. I'm thinking.
Yeah, it's definitely the toughest project we've had. It was a redevelopment of office. So I'm sure you've had people on who have either talked about the opportunity or the difficulties of converting office into multifamily, and to make it a little more challenging. Even there was retail on the first floor that was open the whole time. So
wow. Plus to make it a little bit more challenging, the building's looks like it's about 120 years old.
50 years old. Yeah. So everyone knows the building. It's a historic building. We have really good retail tenants in there that are pretty well known around Baltimore. I was running the GC on that. It was an intense construction process, but we've now had it for 7 years. It's stable. It was kind of a stepping stone for us.
Yeah.
But that's a special one. Yeah.
Very nice. Very nice. Baltimore. I love that city. I've got fond memories. Years and years ago, I used to, believe it or not, fly there 3 times a year from the middle of nowhere, British Columbia, Canada, where I live, to a marketing mastermind in Baltimore for credit. It was like 3 flights and a complete pain in the butt, but it was worth it and just a beautiful. Yeah.
There's 2 kinds of people who have only ever seen The Wire and people who actually have been to Baltimore and got to enjoy it. So, a few cities, but I actually, if it weren't for starting my real estate business, I really wouldn't have stayed, but I'm glad I did. It's a difficult market to know the precise areas where you should be investing. But once you're here, you've got that access that very few people have. Yeah. From outside.
So that's what your current portfolio looks like. Now, these days in 2026, when you're looking ahead, you're looking for new opportunities. Are you still focused on the multifamily, or is it more on the commercial side? What are the deals that you're looking at?
The last deal we closed was December. It was about 395 apartment units. We're currently, we do all of our own property management. So we're still in transitioning. There's a whole rent increase program and a renovation program. So it's been hard to find good cap rates in the multifamily world, short of, Class C, heavy value add, where seems like you're overpaying, even though you're doing all the work. I'm sure you have a lot of people on who have said similar things. So most of the opportunities we've looked at, I would say over the last 6 months, is in retail and hospitality.
As in hotels?
As in hotel. So for those, we would really be partnering with an operator, but I just think the cap rates and the the valuations are better for the hotel stuff. And then on the retail, you can still find 9-10% cap rates where you can actually get some cash flow. Multifamily, I feel like it's still sub 6 when you really, have the full transparent picture. And that's, with rates where they are, there's just not
making much sense.
We balance the cash flow and the capital appreciation. People in the bigger markets, may look at things differently, but if there's no cash flow, then we're gonna pass.
Yeah. So Andrew, what was it that kind of sparked you about real estate investing in the first place?
Sure. So it was kind of a light bulb situation. The house I was renting a room inside of was the landlord wanted to sell it. So roommates and I put some funds together, did the down payment, and the day we closed, we effectively doubled our equity based on the purchase price and what the market value was, and we were cash flowing more than $1,000 a month renting bedrooms.
So you were using 2 of the bedrooms, but the cash flow for the other ones you're renting out
we had 7 bedrooms in this house. It's a big, beautiful brownstone. So we were renting bedrooms. There's 4 of us that actually went in. So we continued to pay our bedroom rate, and our roommates were paying theirs. And our total rent income was $4,200 a month. And our total, our mortgage was like $1,900, taxes and insurance. So we're over $1,000 a month. And that's when I was like, okay, I was in the period of my life. We took a lot of hard money in those first few deals after that. I don't recommend that, but that's, we did 37 deals in the first 2 years after that one. And then since then it was just, scale in terms of size. It was.
So are you guys still working together, or are you kind of gone off, started the business on?
Yeah. So we still have the house. I actually just dropped off a fire extinguisher over there, yesterday. So yeah, we still have a ton of equity in it. Cash flow is still pretty good, but I have different partners for my other real estate. So that was kind of my light bulb moment. Although they all had other work that they kept with, but.
Yeah. Right. What was your profession before this? Or were you a student at the time?
Yeah. So I was interested in tech and marketing. I think I didn't know what I wanted to do. And so real estate became something that, I loved and I could make money from and never look back. Yeah.
Hey there, if you're a capital raiser, a syndicator, or a fund manager, and you're looking for a steady flow of incoming accredited investor leads, then go ahead, grab a free copy of my new book, How to Get 20 Accredited Investor Meetings Every Month Without Cold Calling, Networking, or Chasing People. You can get that at 20accreditedinvestorsbook.com. Again, that's the number 20accreditedinvestorsbook.com. Yeah. Well, hey, that's a smart path, and proof was in the pudding. And yeah, what a fantastic way to get started. So at this stage, you've been doing this for quite a few years now, Andrew. What do you think is your secret sauce? What is as Robert Kiyosaki calls it, your unfair advantage? Something that you do in the real estate space that, maybe it comes easy to you, or you're a natural at it. Break yourself up a little bit there. What's your sauce?
Sure. So the deal side is definitely my strength. Finding the deal. And I think I'm equal parts very aggressive from a risk-taking perspective, but very conservative from a numbers perspective. So I'm very eager to look at deals, but I'm very, very slow to convince myself of doing them. Okay. That could be a new deal from a acquisition perspective, but even things like, property improvements, working with vendors, like I'm very careful about not overspending. So, when it comes to buying deals or managing them, you got to really be careful not to overspend and go over budget.
It's easy to do, isn't it?
It's really easy to do. And I think, you got to buy right, you got to manage well. And in order to buy right and manage well, you really got to kind of watch your costs. Yeah.
Yeah. Good advice. So, yeah. So a lot of multifamily investors went through some tough times over the last few years, and you've been in this business for a while. Did you kind of see that roller coaster? How did that affect you guys in Baltimore with your portfolio?
Yeah, I mean, insurance and utilities have been brutal, where rent growth has not kept up with it. So I will say cash flow is as good, but we were doing 8% was our minimum, dividend rate that we were targeting. So from the get-go, our margins were good enough that, now we might be at a 6, and it's difficult conversation with our LPs to go from 8 to 6. But where I've heard the biggest challenges were in markets like a Houston or Austin, the markets that were hockey stick growth and then kind of hockey stick in the other direction. I'm sure they'll come back. But that's the roller coaster I've been hearing of. We're also, eds and meds, the federal government are the major players in our area. And those, they don't kind of change quite like other markets that are going off of, investor confidence and this and that. So you still have pretty high employment in Maryland, a very, very strong and diverse rental market. So we haven't seen as much of a roller coaster, but we've also, bought right. And that's the other part of it. Like, we won't look at anything below pretty much a 7 cap. And if you're buying at a 4 cap and the market changes and all of a sudden you're like barely cash flow positive, and then you can't refi at the 6% rate when you were at a 3% rate, that whole situation began at the purchase. And it could have been avoided by just having a little bit more conservative underwriting, probably.
Yeah. Good pointers there. So as we're recording this, it's springtime 2026. Where do you see yourself and GL Capital going over the next 12 to 18 months?
12 to 18 months. That's an interesting time horizon. 1,000 units was our North Star. So we were pushing back the goalposts, trying to think how we get 10,000 units. So that's definitely larger scale multifamily. Although in lieu of finding really good opportunities, I think we have 3 retail deals we're looking at now. So it's probably a bit more, and from a 12-month perspective, a bit more on the retail side than anything else, because the cap rates are there. And then, as we look to other real multifamily deals, maybe another 600 to 1,000 units, hopefully for the next 12 to 18 months in multifamily.
Exciting. So finding deals is one part of things. Finding the capital for deals is another part of the whole thing. What have you found has worked best for you over the years for connecting with investors and raising private capital for your deals?
Sure. Yeah, we've been fortunate. Things have been pretty consistent and stable. We have been able to do the dividends, and the number one thing people are looking for is getting their money back, and then they'll be happy to give it to you again. So, having good fortune obviously helped us build a track record going from smaller properties to larger properties. But, raising the debt is a beast, but that's not really where the secret sauce is. It's just finding investors in your area through your networking who have typically like probably that 2 to 10 million range is where, from like a net worth perspective, where we've had people who can do something between 150 and 300,000 in an investment. If you start too small on your minimums, you'll have a large number of smaller investors. It's a lot to work with. We do our offerings of 506C. So we're general solicitation, but everyone has to be accredited, and it can't be, with any mincing of those requirements. So that's where we are currently. A lot of it comes from word of mouth, from local networking events, and really regional networking events. It's a long sales process. We know people for several years. The best thing you can do is they say no. You can continue to nurture the relationship, and then send them
circle
the project they didn't invest in that's working out well, and then they kind of get the sense of missing out.
Right.
Smart, like any of the stocks or anything like that. So it's a long, slow game, but it's it's worthwhile. I mean, I've found a lot of really like strong personal desire and sense of fulfillment to be able to provide people investment opportunities at the same time as like handling the management. So, I really believe in real estate as a, tool to grow wealth, and that's my contribution. So, but yeah, it takes a long time, strong relationship building. Yeah.
Absolutely. No, fantastic. Well, hey, Andrew, this has been great. Congratulations on building up your company to where it is now and what the goals are moving ahead. You've got a big vision, but you got proof in the pudding as well. So if people want to find out more and connect with you, where should they go?
Yeah, just find me on LinkedIn, send me a message. Would love to meet virtually or in person. And
yeah. So again, for people looking for you on LinkedIn, how are they going to find you?
Andrew Hinton, and my company's GL Capital. So if you search those, you'll find me.
Fantastic.
Yeah.
Very good, Andrew. Well, hey, thanks for being on the show.
Thanks for having me, Dave. Have a good one.
All right, everybody, take care. We'll see you on the next one. Hey there. I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewsyou.com.